Volatility and momentum are approaching a prime position for a backtest that has a 72.31% upside. There could be a setup brewing and we may be catching it early. It won't be an easy run and it may very well validate as easy as it can invalidate. So let's begin. Welcome back to the channel and it's happy Sunday. This is ARCa. Let's dive into VOCL. What is up, you guys, and welcome back to the channel. This is ARCa, and I am back. Let's go ahead and dive in to ticker symbol VOCL, and I apologize if my voice is a little bit out. We have been doing some yelling, right? So I hope to have enough voice for the live stream tomorrow, but you can wish me luck, right? So, yeah, let's go ahead and give this a quick little view on the weekly chart. We've been talking about this weekly chart for some time, and I do think that there is a potential still for a breakout. I guess one of the most important things would be is that we were expecting a breakout from this falling wedge. Now, we did get it, except that we reclaimed the inside of it too. But, this is the most important part of this weekly closure. Check out this huge hammer candle. Sorry about that. And yeah, that would usually indicate a potential reversal in price action, right? So the next candle after this weekly print would be the validator candle, right? Or the confirmation candle. So we would need, I guess, a candle that would close ideally higher than the range high of this current candle, right? So the high of this, meaning the wick, is, let's see, 20 cents, right? So we would definitely need it to go above the 20 cents ideally, right? Or at the very minimum, close the next candle above the closing value of the present one, which is 186, right? So yeah, so let's just go ahead and kind of speculate within that, right? So first of all, if we do have a breakout happening here, then the top side target based on this, from the top side of the triangle to the bottom side of the trend line, how you take trend line here to get your price objective, when you place it to the area of breakout, which could be around here, yeah, I guess let's just say that it were to happen in this next coming week. So then that would actually take us to a target of about 603, right? So we can go ahead and adjust that to 603. I think 601 is just going to have to do it. It's okay. Here you go. And yeah, the breakout target would actually be, let's just say that it were here, right? Since we're about to start this new weekly print. So that would actually suggest a target of about, let's see, what was that? 216. And we can go ahead and move that there too. There we go. Okay. So actually, you know what? Yeah, we would have to do it something like this here. Jeez, okay. Okay. Let's just adjust it. Sorry, team. Just going to be a little, I would like to show as most, I want to show the most detail I could, right? So 224 is what it's looking like. Okay, so let's move on to the next chart now. Okay, so what I meant in the intro is that we could be setting up a statistical play here. And this 6-hour critical contraction to expansion backtest consists of historical volatility, right? So we would need, let's see, critical contraction to expansion. Yeah, we would need volatility to enter the critical contraction zone, which is down here within the 15th percentile of contraction. I'm sorry, contraction or volatility. And we need this to then pivot upwards alongside the moving average, right? So the volatility component, right, the spectrum line, and the red moving average, both upside of the 15% and with an upside pivot paired with stochastic momentum with an upside. So this preparation could be soon, and I'm wondering if this setup may happen actually tomorrow, but we shall see. Now, the back test, right? So anytime that volatility, of course, you know this, anytime that volatility has expanded from this critical contraction zone, I have taken note of every iteration where that has happened throughout the entire trading history of the asset on the 6-hour chart. So these are all of my samples here, right? And this is the data set that came out of this. So let's go over that now. Okay. All right, so 65 total iterations, of which 47 were guessed correctly to the upside, giving us an average upside accuracy of 72.31%, with an average upside thrust, aka mean, of 91.78% over the span of about just over 9 days. I did calculate the standard deviation here, which is the distribution curve. I'm not sure if I have it in here, right? So it's the bell curve, right? So the center of the center, which is 68% of the results, land at 293% to the upside. But of course, you know that the measurement that I'm actually really looking for here, it would be the 91.78% to the upside. Remember that the criteria has not met yet, right? So we're still waiting for that to confirm. And you already know exactly what we need to get that confirmed, right? So yeah, if we were to make this move to the upside from from this point here, let's measure it, right? So we'll measure the 91.78%. 91.78. That should be close enough. It's suggesting 361. Right now, this line here that I have is actually the take profit from the psychological target, right? So taking a trend line from this channel, from the top side all the way to the bottom side, then you apply it to that supposed area of breakout. That takes you to a target of 396. So it's very close to the statistical backtest, coming up to a target of about 361. Okay, so naturally we have a resistance range, right? So we can go ahead and kind of draw it in just like this here for our review. Okay, now I know that I have also the standard deviation calculation here, so I guess we can speculate a bit, right? So if we were to just fire off the signal from where we are, remember, it's probably not going to be like this. It's probably going to be different. But that's just because we don't know exactly when the signal is going to fire. Let's just say that it would fire tomorrow and we were around the same price of 187, right? So we would lift off 293.10%, which is where the 68% of the results land, statistically speaking. So let's go ahead and put it in just like this. Let's see. 290, I think, yeah, there we go. That's going to have to do it. 298.83, and we had 290, I'm sorry, it's 293, my goodness. Here we go. That's fine there. That's coming up to about 734. Okay, so I would really like for us to practice some discretion with this, okay? Because, the statistics are not certainties, okay? So that target that is being provided here of 734 has a lot to do with the 3.272 at 756, right? So very, very impressive for it to come out to those targets there. All right, so let's go ahead and look at the next chart here. So 12-hour time frame. This is a little bit of a faster time frame here. And I do believe that there are two potentials here for a right-angled broadening descending wedge. Not sure which one is going to favor, but I did take down two different targets, right? So this would be test number 1, test number 2. And here, this is test number 3 with a capitulation perfectly executed. Right, we have a hammer candle on the 12-hour, now suggesting a continuation to the upside with a nice validator candle or validation candle. So what I am noticing here is that price action has come back down into the 0.382 Fibonacci ratio. And the reason why I'm noticing that is because between the 0.382 and the 0.618, this is the golden pocket, right? So us jumping into this and starting the support from here, it's a very bullish area to sit in. Now, if we were to take the dimensions from this point here to this point here, you get this trend line here, which would be a psychological target number 1 of 1136, right? And now if you take this trend line here, which is from, this point here all the way down to this point here where we're thinking the secondary support could be, well, that's taking you to 2459. Right, so I just want us to kind of keep an eye over some of the targets that are being talked about here, just in case you're able to connect them into your thesis better than I could, right? So yeah, we already speculated on the weekly time frame hammer candle. The only reason I have this chart up here is because of the volume. Volume here is actually now below the first bull volume, right? So this usually indicates or gives a signal off to day traders, and that would, increase volatility here, increase attention towards the asset, and increases the potentials for FOMO. Okay, immediate short-term time frame, 15-minute. It looks like a little bit of resistance here. Same thing on the 30-minute. Let's see the 10 with a little bit of resistance, and the 5 with a little bit of a bounce. Okay, so if we were to come down anywhere, really short-term time frame, this would be super short-term. Right, so yeah, immediately we can see that there is a support from a couple moving averages, right? First of all, I think I would have to give the biggest credibility to the SMA 10 and SMA 50 at about 174. Not sure that it can drop there, but it's very probable. Okay, so 174 to around 170. Okay, so I'm going to go ahead and draw that in just like this. Or 160, sorry. Oh, wait, hold on. No, yeah, 170. Okay, and then to the SMA 10, which is also located at this point here, that would be 175. Okay, yeah, so there is a probability here that we can come back down and support from the SMA 10 and or the SMA 50 and move onwards. Now, the next indicator here would be the 4-hour RSI, suggesting a little bit of consolidation here, and that would be okay because of what the immediate short-term time frame is deciding to do currently. Right, the next one here we have is the 8-hour time frame with a nice upside pivot. The daily time frame does have a little bit of resistance here, but I would assume that would be part of our play as well. So if we were to resist, yeah, I think that we come back down here, then we come back up and resist from the area of around 197 before continuing on to the upside. Okay, and let's see. 3-day time frame in the gravitational zone here, bouncing from the SMA 14, represented by the pink line, looking very bullish. And the 5-day. I think we're going to have to come back to this one to see what the immediate short-term time frames do to it. Okay, team, so now you know the targets, you know the risks, you know the potentials. Go ahead and get in touch with me with any questions if you do have some. Please take whatever I do show and iterate within these videos as just a form of entertainment, as it cannot suggest for you to buy, sell, or hold any assets whatsoever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good night, and I will catch you at the bell mañana. Adios, team.